Hello, my name is Dick Toller. I used to be a futures trader. I traded price patterns in the futures market. They were very profitable. I was really quite good at it if I look back on my trading career. It came to a screeching halt back in '02 when I had a brain trauma. It was a ruptured brain aneurysm, and it pretty much wiped out 10, 15 or more years of memory. However, strange part was I remember my trading. I remember price patterns. I wrote a book. The book came out, I published it, let's see, in 97 or 98, somewhere in there. And it's quite comprehensive for beginner traders on how to trade price patterns and the rules to follow, what to look out for. Anyhow, this video is about a price pattern in the mini hogs. The book is centered around mini futures. I don't know if they even trade them anymore. Again, I'm not a trader anymore because of that brain thing, but that's another story completely. I'd like to get on with this one here. This particular one is about a bull flag, and that's right here. I've blocked out the rest of this stuff so you can see how this thing actually formed up, and I'll show it towards the end here on how it turned out. You've got a resistance point here, very critical, plays a big part in this particular trade. The bull flag starts down here. Notice it's a blue bar, that's a positive up day. The reason I put the start of the pole here is a very valid reason, explained in that book. And here's the peak of the pole. Here's the actual flag itself. Now in mini hogs, 1 point equals $2. In a standard hog contract, 1 point would equal $4. So if over here you get about a 5-point move or so, right, like this, that's around $1,000 for a mini contract. Pretty good. Now a standard contract, it's $2,000. There's really good reason to play the mini contracts because the margins were quite small, and I took advantage of that. I traded standard ones too, corn, wheat, that sort of thing. Anyways, back to this bull flag. It starts out here at the top of this pole, ended up at about 65.5. Well, I actually did at that time. The base of the pole was at 60.3. It made a target of about 500 points, or 5 points. $2 a point, that's about $1,000. Well worth the trade. I used the MACD indicators, one of many I used. I actually have a couple others I like, and they all have to be in sync. Just to keep the illustration simple, I only put this one on. Okay, I'll move on. Another point here. This entire process here is explained in a book I'm giving away on my blog, which is at www.myfuturesblog.com/WP. It's about a 100-page PDF book, easy download, absolutely no cost. I didn't pepper it with a whole bunch of commercials in the text. There's a commercial links at the end, but it's like anything else. TVs play good commercials. So are most of the books out there. I have a couple of nice links at the end that if you look at them, great. If not, no big deal. Okay, now I'm going to move on to how this actual trade turned out. Okay, here's the actual trade and how it turned out. This is the August mini hogs. You can play the standard August hogs. I'm not even sure if they have mini hogs anymore. Again, this is a while back. This all pertains to the book I put out 97, 98, somewhere in there. Again, you can get that book free. It explains this whole trade here and a number of others and how you trade price patterns, and for that matter, how you trade period. Some of the rules you should follow. It's quite comprehensive. It's in PDF format. It's easy to download, and again, it's free. if you're a trader, a new trader especially. It covers a lot of things you should really know. This is the trade again here. Here's the breakout right here. That was a dandy. Down here, look at the MACD. It's taken off. It breaks this strong support level here in fine style. And we're looking for a little over 5 points. And it goes up here, takes off maybe 3 weeks or so. It gets up to this point here. What you do is you tighten up your stops. And it goes down here, you get stopped out. And you made maybe 4 points, so it's $800. Not bad for a few weeks' work. Okay, one final point I'd like to bring to your attention. This is the August mini hogs. And again, they may not even trade this anymore. It's been quite a while since I was able to trade. That brain incident I had back in '02 done me in. I'm no longer a trader. But I still know this stuff. I just don't trade. Anyhow, this is August mini hog contract. The August standards are the same. You're running out of contract time here. Futures contracts expire. Volume goes down to almost nothing. You may have a tough time getting out, and then you're in real trouble. So I can't recommend taking this part here at the end of August. You better scrap it. Get out. Go on to something else that's got some volume to it. Volume is critical in these kind of trades. Okay, again, if you want to see how this thing actually works out, it's in the book I wrote. I'm giving it away. I'm not a trader anymore. I just like to pass on things that I used to do. If you go to my blog, it's www.myfuturesblog.com/WP, and you get the actual book and probably pick up a whole bunch of other nice things there. Good trading to everybody.